Did you know there's a mortgage secret that nobody is talking about? It's a way to ditch your mortgage insurance, potentially saving you thousands annually and without the hassle or the cost to refinance. Welcome to my channel, where today we unveil the steps to remove mortgage insurance without refinancing. I'm going to take you through the process and I'm going to give you all the criteria about the potential savings awaiting you. It may seem a little complex, but I think I've broken it down in a really easy way for you to understand so you're not left in this maze of misunderstanding or not know how to actually make this happen. And I'm also going to explain to you why it's important mortgage insurance is there and why it's important to get rid of it. All right, so the knowledge I'm going to share isn't about just short-term savings. It's about long-term financial freedom by increasing your monthly cash flow and upping your potential to see gains, not only just on a monthly cash flow basis, but also in your real estate portfolio. Every single penny counts right now, especially when we're managing our finances in these challenging times. One expense that can be done away with and is often feels like a thorn in our sides is mortgage insurance. It gets tacked onto our monthly payment. I have got a way for you to eliminate it without going through the process of refinancing nor the cost. Yes, this is possible, and it's possible in today's market. I'm here to guide you through. If you align with the criteria set, you could save hundreds of dollars each month. So let's take a look at this money saving secret together. My name is Darren Hunter. If you find any value in what we're getting ready to share, please do me a favor. Like, subscribe, follow along, comment below. I certainly appreciate it, and I'm here to help. Hope you guys enjoy. To kick things off, let's unravel the mystery behind mortgage insurance. This insurance is essentially a safety net for your lender, not you, shielding them in case you default on your loan. Typically, if your down payment was less than 20%, you're carrying the extra baggage of a mortgage insurance. It's an additional fee on your monthly mortgage payment, and over time, it can feel like you're burning money or literally lighting it on fire. The MI you're paying was to protect the lender in case you defaulted, assuming you had less than 20% equity. There is a fairly good chance that that assumption is gone. You now may have 20% equity since you've been paying on it for years. So let's talk about the prerequisites for removing the mortgage insurance without having to refinance. Here are the essential criteria. Number one, it cannot be an FHA loan. It must be a conventional loan backed by Fannie or Freddie. How do you determine that? So a couple different ways. Number one, if you log into your account and look at your mortgage statement or go through your loan details, there's a fairly good chance that you're going to see if you are on a conventional mortgage. Now, if you have the closing paperwork from when you closed on your mortgage, whether that was a refinance or that was a purchase transaction, if you go to the note, you will be able to determine whether you closed on a conventional or an FHA loan and whether it was a Fannie Freddie. Lastly, chances are if it wasn't an FHA loan and you didn't do a bank statement loan, you didn't do a 1099 loan or a P&L loan or any sort of exotic sort of non-QM type of transaction, there's a pretty good chance you're on a conventional Fannie or Freddie mortgage, and that's step number one. If that's the case, you're on the path to eliminating that mortgage insurance. Number two, you must have at least 20% equity in your property. If you don't have 20% equity in your property, you're wasting your time, but you want to be prepared for when you do have that 20% equity in your property. How do you determine that? Well, of course, I would highly recommend that you speak with one of the local agents that can get some sort of price evaluation for you. I certainly can help you. We have tools other than Zillow and Redfin that can provide you with a pretty good estimate of what your home is valued at, and you determine how much you owe, which is found on your mortgage statement, versus what the value is. If you have 20% equity, you have now checked off that second box to eliminating that mortgage insurance. Number three, you've been paying mortgage insurance for at least 2 years. Now, you may be somebody that pays ahead of time, and it's as if you've paid 2 years worth of mortgage payments. That doesn't count. You need to determine when your first payment was due. What month was that? And have you made 24 monthly payments since the time your first payment was due, or has 24 months expired since you made your first monthly payment? You need to be in that property for at least 2 years from the first payment date, not the date that you close, but the first payment date. So again, step number 3, have you made 2 years or 24 monthly payments since the first payment date on your note, which again can be found in your closing package from when you either refinanced the property or when you closed on the purchase, whatever was the last transaction. Step number 4, you're ready to pay for an appraisal or get a BPO, or what's called a broker's price opinion, to determine your home's current value. Now, do not order this on your own. This has to be ordered by your current servicer or your current lender. If you come to the table, you talk with your servicer and say, hey, I got Mr. Smith from XYZ appraisal company. They determined that my value was Y and I owe Z, then it's not going to matter. You've wasted your money. Do me a favor, wait to pay for the appraisal or the BPO until you've started the process. My whole point here is you need to make certain that you're ready to pay for that appraisal or pay for a BPO, which can range from literally anywhere from $200 to $700. It will solely depend upon your servicer and how much they charge, but you want to be prepared for that out-of-pocket expense. That's really going to be the only expense that you should incur during the entire process, is for the payment of an appraisal or a BPO. Let's visualize for a moment, eliminating those monthly insurance premiums that turn into extra cash. This newfound additional cash can be channeled towards paying off other debts or even paying down your current mortgage faster, which, guess what, builds more equity in your home. And it's like setting off a positive chain reaction to your finances. Here's the bottom line. You can take that additional money, you can put it into some sort of investment vehicle, whether it's a CD, savings account, equity trading account, and you can gain a return. I'm not going to sit here and tell you that $200 a month gaining 5 or 7% interest is going to change your life. But if you're somebody that's not already saving, you're not already paying down your monthly debts every single month, or paying them off, you're making monthly payments, or you're just making the minimum payment, applying that additional money is going to save you over the long run. Putting that money to work and obtaining compounding interest, taking advantage of compounding interest, is going to create a mindset, and it's going to gain over the years. And listen, let's be honest. I'm 44 years old. There's a very good chance that Social Security income is not going to be there when I retire. I'm not counting on that, and nor should you. And let's take a step back. If you're on a fixed income, this is an opportunity for you all to increase your monthly cash flow by anywhere from like 8 to 10%. Because chances are, if you are on Social Security, you're gaining an extra $200 a month. That's probably close to 10% of what you're taking in net. That's an increase of 10% on a monthly basis if you're able to eliminate that mortgage insurance. And again, for very little out-of-pocket expenses. So it's incredibly important that we change the mindset and we use those funds, that newfound additional cash, and we put it to work in some form or fashion. All right, are you ready to kick that mortgage insurance to the curb? Here's the roadmap. Number 1, initiate a conversation with your mortgage lender about the steps necessary from removing the mortgage insurance. I am telling you right now, they do not want you to know this information. They do not want you to eliminate your mortgage insurance. I promise you. However, it's absolutely allowable. You have to be able to call up, initiate the conversation, and discuss with them and demand that you speak to the mortgage insurance department and you get the documentation needed in order to start the process of eliminating that mortgage insurance. They are not going to make it super easy for you. They are not out there marketing that this is even an opportunity. Trust me on this. Take a leap of faith. You may not know me from Adam, but take a leap of faith. If you're paying mortgage insurance and you believe you have 20% equity and you've checked off all the criteria that I listed above, take a leap of faith. Take advantage of this and let's start saving you money. Number two, go ahead and pay for that appraisal or BPO. Now, of course, do your due diligence, right? We want to make certain that you feel pretty positive. You have a high probability that that appraisal is going to come in and you will actually have 20% equity in your property, because if it does not, you do not have 20% equity, then you will not have your mortgage insurance removed. And you're going to call me and you're going to tell me, listen, you told me incorrect information, but you did not do your due diligence. If you need help, do me a favor, contact me. I'm happy to run a scenario and provide you with a breakdown of exactly what a very high probability of what your home will appraise for. Step number three, submit the required documentation and follow the lender's process to the T. There's no doubt about it. They're going to provide you with a list of documentation that they want you to provide. They are going to require you to do the legwork. Again, they're going to make it more challenging for you to make this happen. Okay, they do not want you to eliminate your mortgage insurance, but follow the step-by-step instructions on what they provide you, and you will have your mortgage insurance eliminated again if you check all the boxes. While you're gaining all this financial insight, why not hit the subscribe button below and ring the notification bell? It's your gateway to more money saving hacks and financial wisdom. Folks, there you have it, a pathway to eliminate mortgage insurance, save the precious dollars each month, and bolster your financial stability. It's all about making informed, smart moves to ensure a financially prosperous and stress-free life. That's what we want. Thank you for tuning in, and I eagerly await our next financial adventure together. Until then, stay financially savvy and take the reins off your financial destiny. See you in the next video. My name is Darren Hunter. Hopefully you enjoyed it. Have a wonderful week. Look forward to talking with you next week. Take care.